Steve, this number was
Nobody.
nobody thought 69,000.
I mean, even the most downbeat expectations coming into this were not nearly as bad as what we saw today.
Right.
I mean, the economy added only 69,000 jobs last month. The unemployment
consensus
rate
was 155.
155. Unemployment rate ticked up to 8.2%. I mean, and when you delve deeper into the numbers, it's just ugly across the board. It's just it's pretty bad, and you're seeing the market reaction today. People are just flocking out of risky assets and into anything that's perceived as safe.
I mean, the market was under pressure to begin with because, like I said at the top, China had a manufacturing report very bad. Europe, you had manufacturing reports very bad. So the market was set up for an ugly day. Got it.
Right.
Got
it.
So,
well, let's talk about this, because now this is the third straight month in a row that this report has been pretty bad, the jobs report. And so we were sitting here a month ago and saying, okay, 2 months in a row, you know, a third one would mean that this is a trend. Well, the trend is here now. And so that's what the scary part is right now, is that...
Right, and you can see there the unemployment trend. You see May ticking up. I mean, the unemployment numbers have not moved that much.
Right. Yeah, the unemployment rate, you have to take that with a bit of a grain of salt.
It's the number of jobs being added that is bad, and it's where the jobs are coming from.
Right.
I mean, yes, we had 69,000 jobs. Okay, where are they coming from? Most of them were in healthcare. What was it? Transportation and ground services. You know, not good things. Construction lost ground. Manufacturing made up a little bit of ground. But as we wrote, the Wall Street Journal, we wrote in a story this week, manufacturing has been doing so well because wages have been flat in manufacturing.
Right.
So you look at where the jobs are coming from, and I'll tell you right now, I think that construction number is wrong. I think they lost 28,000. But hey, that's
anyway.
You're not getting a lot of jobs being created in places where they give a good wage. And you saw the wage number, wages up 1.7% year over year. That's a bad number. That doesn't even match inflation.
And you look at the 69,000 number. I mean, even when the economy was growing at the 200,000 pace that we saw for those 3 months in the beginning of the year, that's still not, the economy needs to be growing at 250, 300,000. Those are the numbers that you need to see for a sustainable, true economy.
Right.
And we're nowhere near that right now.
That's the point, right? If you want to know that the economy is growing on its own, that the Fed can take away the training wheels, that wages are going to be rising, you need numbers like that.
Exactly.
And we are not getting
nowhere there.
Not on any kind of sustained basis.
And you mentioned the Fed, and now the big question is what is the Fed going to do now? And a lot of people are talking about QE3, another round of quantitative easing.
Yeah.
Is that the answer right now? I mean, the intention of QE3 is to push down interest rates, but interest rates are so low as it is. So,
you look at the
10-year
the rate on a 30-year fixed mortgage, the interest rate on 30-year fixed. I'm pretty sure it's under 4 now, right?
Oh, yeah.
So
it's record lows.
How much lower do you want that?
Yeah. You going to refinance?
What?
You're going to refinance?
I'm really thinking about it.
Yeah, so I mean, the point is that, what can the Fed do? What is left in the Fed's toolbox? It's a big unknown right now, and it's not just the Fed, but it's just central banks around the world at this point.
Right.
So,
because
and that's the big worry, and that's why you're seeing the global sell-off. It's not just here in the U.S. It's around the world.